Today's guest is Domingo Valadez. He is a co-founder and CEO of Homebase, a platform designed to streamline deal administration, investor relations, and fundraising for real estate syndications, currently supporting $85 million in assets under management. A Wharton alumni and ex-Googler, he has syndicated 2 deals himself, building an investor base of over 3,500 accredited and non-accredited investors. After experiencing firsthand the complexities of fundraising and deal management, he built Homebase to simplify these processes for syndicators. Domingo is also the host of the Groundbreakers podcast, where he interviews entrepreneurs and real estate operators about their journeys and current deals. Today, we unpack the uncomfortable truth behind startups, co-founder dynamics, capital psychology, and how to think like a founder, even if you never want to be one. Domingo, welcome to the podcast.
Thanks so much for having me on, Leo. Super excited to be here.
Absolutely. So I always like to start. Can you share how did you get here today?
Yeah, absolutely. So I've had quite a winding journey. I'm from South Texas originally, McAllen, like the most southern you can get. Both my parents are dentists, but they did a lot of real estate investing outside. And so I like to tell people that I grew up going to a lot of open houses as a kid. Like that was my first foray into real estate investing, really just seeing it through them. Ended up going to Penn, studied finance and real estate there. Post-graduation, I was at Google for 5 years and did product strategy while I was there. And then left 3 years ago to start my company, Homebase. And let me tell you, to your point, foundership is not for everyone. We've gone through a ton of pivots throughout that journey. We actually started off as a crowdfunding platform. We let anyone invest in fractional real estate for as little as $100. And through that model, we successfully acquired and syndicated 2 different assets. Went viral a few times on social media and built an investor base of about 3,500, as you mentioned earlier in the intro. But through that, learned a lot about syndication, from fundraising, investor management, compliance, all the headaches that come with that. And so built a ton of software to support ourselves first, and then, ended up pivoting into a full software business when sponsors started reaching out, just being like, hey, can we use your guys' platform for our own deals? And so, yeah, we made that decision last summer in 2024. We're now supporting about 22 different sponsors with probably 95 million of assets. So it's been moving relatively quickly, and I feel like we're finally starting to hit the stride of pretty consistent growth. So thank you so much for having me on.
I love it. That's an amazing story. Can't wait to dive in. So to start on the startup side, tech startups often get romanticized, right? You have Facebook, all these crazy startups, but the actual game is quite opposite. And Elon Musk, he equates it to chewing on glass and staring into the abyss. So let's unpack that. What does it really mean to go from an idea to something people pay for? And how do you not burn out through that process?
Yeah, I mean, I love that quote. I've definitely heard it many times, the Elon one. So I'd say there's a big difference between first-time founders and second-time founders. I feel like I'm a second-time founder, even though I'm under the same company name, but because we went through a complete pivot into something so different. But the first time, we were building product based on an idea we had, and we didn't really talk to customers until once we had a marketplace live, 8 months of building, and then went to market. The second time around, we actually got paying customers when we still just had Figma mockups. I basically mocked up what this experience would look like. I got people to sign, letters of intent saying if I built this, will you buy it? And then after we got 3 people to say yes, we're like, all right, we have enough, I think, validation here. Let's go ahead and build it. And those 3 people are still our customers today. I'm incredibly grateful to them because they've gone through the most bare bones version of Homebase to where it is now. But definitely incredibly challenging getting your first few customers. They're basically taking a bet on you and your team, and they care more about your vision and story than they do about the product, really. If anything, your product's helping them solve a pain point. Probably not incredibly well, especially in the early days, when you're first launching. But the hope is that the vision you're selling them, they're bought into that. And so they're like, okay, I know eventually this is going to help me with these workflows. And then, as Homebase has developed and gotten more robust, then they've continuously told me oh, this is great. And we've continuously gotten good feedback. So very much an open conversation with customers as you're building. But it's about finding those early believers that are willing to take a bet with you and, risk their business with you as well.
Mm. That's the painted door model that you mentioned, right?
Yeah. So painted door test is something I feel very passionate about. And we tell this to sponsors all the time. The best way to test if people are actually interested in something is to basically emulate as if you have it live. And so what that would look like for us back when we were crowdfunding deals is we used to showcase like these residential properties people could invest in, even though we didn't have them available. So people would go through the entire journey, they click on like invest, and then it'd say like, hey, this is not available, but lock in a soft commit when it's available. And so if you get someone all the way there, there's people very interested in like that particular thing that you're selling. And so that's an incredible signal to build that specific feature, that specific product. And so translates really well to syndication, where you have a deal you're sending people to, get them to do a soft commitment, and then those people are very likely to convert.
Absolutely. I think there's a lot of parallels between the two worlds of syndications and of startups because they're both models that require raising capital, and it's really the long game. And the payoff, at least for the people involved, it's in the back end, right? It's with scale. It's not like it immediately gets you a payout immediately. So how do you stay focused and motivated, amidst the chewing glass portion of building a startup?
Yeah, no, for sure. It's absolutely not for everyone. It takes a lot of like mental resilience, and the highs are incredible. The lows are just as incredible. So you really have to be tackling a problem that you're personally passionate about and also selling something that you like deeply believe is helping folks. And I'm happy to say like I love what I'm doing at Homebase. Like I wake up every day incredibly energized. I've told some of our customers that if I was not doing this in another life, I was also a syndicator because like I love talking about real estate. I love hearing about their deals. Like I always go into like, what markets are you in? What are you doing? What are you investing in? Like, tell me all the details. And I don't have to do that like for the software that we're building, but I just find it so interesting. So I love that I get to talk with these people on a day-to-day basis, get to build product that makes it easier for them to do what they love, which is like the actual investing, the actual like talking with LPs, actually like getting things underwritten, and then have to deal a little bit less with the stuff they care less about, which is like all the back office deal management tied to it.
Mhm. So what's the biggest lesson that you've learned from the syndication side from speaking with sponsors and vice versa? What's the biggest lesson you teach them?
Yeah. I'd say the biggest lesson I've learned from sponsors, I'd say it kind of goes into two buckets. I'd say like the folks that are, I think, in my opinion, the best syndicators are those that are not always looking to do different deals. Like they're very methodical what they get into. They find great partners that they vetted over a period of time, but they're not willing. Like they're not scared to take risks, right? Like everyone knows that you're marrying someone for the next 5 or 10 years on anything you work on. And so you want to do your due diligence, but once you do, you're all in with those people on the deals that you're, getting into. I think everyone like glamorizes fundraising. Not as many people glamorize the actual operations of deals. And so also some of the best folks that I know run an incredibly tight ship when it comes to property management, when it comes to like turning a property, and like they'll get into all the details of like how they're doing it. And those to me are like some of the best sponsors and operators where I'm like, please like host a training and share some of these learnings with like other people in the space because way too much time and effort goes into fundraising, which is incredibly challenging as well, especially in this market environment. But fundraising is to purchase an asset, and now you actually have to manage that asset once you finish that fundraise, and that is a whole set of skills that not many people teach. It's kind of like you have to learn by doing. So I'd say like that is like continuously always amazed when I hear more stories of people doing that and the lessons I've taken from that. In terms of what I try to teach sponsors, I'd say to the point earlier, fundraising is incredibly challenging. You need to have good systems in order to fundraise. It's even for myself at Homebase when I fundraise for like personal capital for our startup, it's very much a sales process. And so the second you realize that, then you start building systems to help you in that sales process. And the conversion is someone actually saying, I'm going to invest in your deal. So what are all the touch points that you have with your customer, who in this case is an LP, and how are you bringing them along the journey so that eventually when you have a deal ready, you can very quickly get them to commit and then you can move forward. So I'd say like that is what I try to tell sponsors, like what is your funnel? What are you doing? And like you mentioned the painted door test, I think that should be part of everyone's funnel. I think it's incredibly powerful. And so I try to educate people along that journey.
Absolutely. I think a lot of people are misinformed by social media because they see on LinkedIn, hey, we closed on a 100 unit property or something like that, and it's big, it's sexy. Oh my goodness, it's multifamily, right? But once you have the asset, that's when the bread is made. So you have to keep on making it. So you can make money on the buy, as they say, but the true gold is in the operations. A bad operator can kill a good product. And that's true for real estate and for startups.
Oh yeah, absolutely. I think it's funny, like quote, like a bad operator because of good startups. Like you'd rather almost be part of a worse deal with an insane operator than like an amazing deal with a bad operator. Because at least in the first outcome, like you can get to a good multiple. On the second outcome, you're probably gonna lose your money. So yeah.
Absolutely. And you learn so much on your second point about systems, about building and running a business because the components are very similar, right? It's like what is your path to revenue? How do you cut costs? How do you make sure that each activity is accounted for? How do you maintain that discipline? So there's a lot of similarities in this. And when you're talking about partners, and evaluating them, I absolutely agree. You need to take your time to evaluate them. I think a lot of people are too gung ho on getting a deal done and they rush into a partnership. That's like rushing into bed with someone that you just met, right? It's probably not a great idea. You might have regrets later.
Yeah. No, very true.
So let me ask you this. When you're evaluating a partner, that is one half of the battle because to select the right person up front, that is incredibly time consuming. But on the back end, people know how to present themselves, right? There's people that are great at interviewing and they might get past your sniff test. So like how do you manage that? If someone turns out to not be the way that they presented themselves, or maybe you have disagreements and absolutely in your startup, some of these disagreements could be quite big. It's like where's the company going?
Yeah. I'd say at least on the startup side, like in hindsight, I probably rushed into one relationship in like one of my co-founders a bit too quickly, but it's worked out for us. Like I got lucky. A lot of my initial intuition of this person was correct. Of like, I think he's a really good person. I think he's very hardworking. But that's not always the case for other people. Or like, you to your point, people present themselves in the best light in the beginning when you're like in the dating phase, and then you find out who they really are in the hard times. So I'd say really the only way you can vet that is talk to people that they know that you're like, hey, ask for references, and you just chat with them casually, and then work with them in a shorter capacity. So like maybe say like let's work together for the next month, nothing binding. Let's just see how we operate together. How that could be translated to real estate is like if you're trying to do a deal together, maybe you just see like okay, like let's both start scouring for different types of deals and start like just seeing how we could theoretically work together. And if even that is like tough or maybe they don't feel as accountable, like that's probably not a relationship you want to get into. If they're already showing signs of being lazy, not being aligned to what your goals are. Uh, but that's typically how you can vet people. And then also aligning to like outcomes. Like what from this relationship, what are you looking out of this? Are you in it for the long haul? Are you just trying to do one or two deals? Like, yeah, what are your goals?
And do you have sort of a framework that you discuss with potential partners, employees on how the performance metrics are or what they want out of it? And how often do you have these conversations with them?
Yeah, I mean, so we're a three-person team, so it's really like just the three of us, and we probably align to talking about our goals like once a quarter of like, hey, like health check. How's everyone doing? Like, what are your goals? Like, where do you wish Homebase was in like a year, 2 years? Like, what type of business are you trying to build? And so like, I'd say that's when we have honest conversations for ourselves of, how are we feeling? Are we still excited about what we're working on? What are the outcomes we're expecting? That sort of thing.
So you bring up an interesting thought that there is so much that you learn being on the other side, being a practitioner of what you do. And when you're early stage working together very closely, you learn a lot. So maybe what's one of the biggest lessons that you've learned from pre going into a startup until now you're running it, you're getting revenue. What's that look?
Yeah. It's really just well, the first thing is how do you manage your time efficiently? I'd say like working at a corporation or like just anywhere where you're not your own boss, like what your time is quite well allocated, right? Because if you're wasting your time, then that's like resources that are being spent not doing anything. So like your boss is like telling you what to do because they want you to get to certain outcomes. When it comes to you running your own business, it's like, what do I work on? Like you have the whole day. Uh, what are your goals? What are you trying to get to? How do you best get and fulfill those goals? There's a million things you could be working on. What are the highest priorities to be working on? And is what you're doing today actually moving the needle for you to hit those goals? And I'd say a lot of a lot of founders when they're first starting off, fill their day with busy work that isn't really helping them either increase revenue, meet more customers. Like I could spend all day like improving our internal processes for how we like take notes for conversations. And I could take all week doing that and be like, okay, now we have an amazing system. But did that get us more customers and more revenue? No. So then that probably was wasted time. Like I probably shouldn't be spending all week doing that. Like, so just like understanding what you should be prioritizing and how you manage your time was, I think, one of the biggest lessons I've had along this way.
I can agree with that 100% because when you're in a startup, it's all about the allocation of scarce resources. And in this case, it's your time. And for me, how I track my day, I used to be a to-do list nut. I have a long to-do list. I would be very accomplished, when I check everything off. But then I realized that I'm doing busy work. I'm doing things that either don't have to be done or I'm fooling myself. I think it's productive and it's really not. So what I do now is I still have my list. I still organize it in different categories, but then I write what are my 3 priority points today. And then from that list of 3, I take it to what is the one thing that if I accomplish today will make today feel good.
I
So
love
it's the
that.
ruthless prioritization of your time.
Yep. I do something similar, but I do it for a week. So like our team will basically say like, what are our weekly goals? And so I kind of, I have the idea of what I want to get done that week. And then every day is like, okay, which of these goals do I tackle first?
Mm, mm. What other mental models or frameworks have you adopted in your day-to-day work that's been super helpful to you?
Yeah, I'd say something that's actually been incredibly useful, and I'm going to give a shout out to a product I use a lot. It's called Day AI. It's basically a new type of CRM where they're trying to redo like how CRMs function in an AI first world. And so every column on has this video recorder that's a part of it. Then afterwards, it basically sends me an email. Like it basically does my follow-up email for me. And then it also gives me like all the key takeaways. Like, hey, here's what you align to. Here's the pain points this customer had. Here's like what they're looking for. Here are your next steps. And then if I don't do them, it nudges me saying like, hey, like it's been like 2 days. You should follow up. And here's like the email you could write to send it out. I like literally just earlier this week, I feel like I'm not being as efficient as I could be in my time. So I was literally having a conversation with ChatGPT of like, hey, like, here's what I do on the day-to-day basis. Like, what can I do to make my workflows faster? And so then it was giving me all these different suggestions. And so then I was like, oh, I need to leverage the AI more because they already do so much for me. So that's like one mental framework that I've been like coming to terms with of like how I can leverage AI to help my workflows be faster.
Mm. Speaking of AI, so right now, as you know, there's a lot of noise around AI, and literally wherever you look, companies are sticking it everywhere, trying to raise their valuations. YouTubers are talking about it, trying to get views, and people are saying AI to make themselves feel more impressive. But like you said, you have to separate the signal from the noise and really focus on what you're prioritizing your attention on and what tools that you're using. So where sort of in that spectrum are you of you're an AI sort of fanatic that you use AI for everything versus not at all? And what's sort of the maybe one or two main tools that you use?
Yeah, it's funny because I feel like in the beginning, I was always trying to test everything. And then at a certain point, it just feels a bit overwhelming where you're just like, there's too many things. I'm exhausted. Like, and I bet you a lot of folks are feeling this way. Where like, you go on Twitter and you see some new AI based workflow. And I'm like, I've been seeing this for like the last 2 years. Like, this is cool. It's just, I'm fatigued. And I think a lot of people feel similarly. I think the resistance to that is, or like the rebuttal to that is, don't let yourself become fatigued. And I feel like I was finding myself becoming that way because what ends up happening is you're going to start using it less because you're tired, and other people are going to take your lunch because they're not, and they're going to basically do workflows to be more efficient than you. And so, like that's what led to the conversation this week of like how I can use AI more in my current workflows with ChatGPT, and we were like, I was brainstorming around that. So in terms of favorite tools, like of course ChatGPT, I use it every day, all day. All my emails go through ChatGPT. All my LinkedIn posts, my Twitter, like video recordings, like truly everything goes through that. And then the second is the AI as like the CRM where I'm tracking all my conversations and workflows.
Yeah, I'm the same way. So I went from testing everything, you're chasing after every little trend to sort of figuring out my long-term trend, and I keep coming back to ChatGPT. I think in America it's the 80% product, so just go with it and stop testing others because there's honestly a cost of testing that people don't bake into whatever they do. Because if you're changing system to system, that takes time away from your focus. And you need to focus on what brings you money, what moves your needle forward. And I need to remind myself constantly to ask myself that. Otherwise, I'll just get lost in busy work. I think that's a huge trap in startups and entrepreneurship. There's just so much to do, and if you're not ruthless with your prioritization, then you'll get lost, and someone else will eat your lunch.
Yep. No, absolutely. Funny enough, I feel like AI is almost going down the way. At some point, like when mobile apps were getting much bigger and everyone was downloading every single app. Now it's so hard for me to download a mobile app because I have so many apps on my phone. Like it truly needs to be like it really needs to wow me for me to download something. I feel like we're almost getting there with AI, at least in like the short term, because people are a bit fatigued.
Absolutely. And speaking of that, it reminds me of the shiny object syndrome. How do you how do you sort of manage that in your business? How do you test your ideas? How do you figure out what to work on, when to push forward, when to pivot? Is there a framework or other signals or measures that you use?
Yeah. Funny enough, I feel like we actually pivoted our first business to like we were way too slow to pivot because we were like trying it. That's what happens for a lot of founders. Like you're so passionate about an idea, you're like, I'm gonna figure out a way to make this work, even if like the market's telling me that there's not a way. The second time around, we're like, we're gonna just literally let the market dictate how we built this product based on user wants and needs. And so as we've been building Homebase, I've had a lot of people tell me like, oh, you need to have a CRM in the system. And I'm like, I've talked to over 100 plus syndicators. You know how many people use a CRM within their portal? Like three. I'm not going to build a product that three people out of 100 are going to be using. I want to build something that the 97 are using. And those are all these like key workflows. Um, and so to the point of like, how do you prioritize? We're a 3-person team. We have to be incredibly ruthless with what features we're building out and what capabilities. So every single conversation I have, I try to make sure I understand what are the key workflows that you're using in existing systems? What are the current pain points that you have in either your day-to-day life as you're like, doing your role as a syndicator? And then secondly, like in the system that you're currently using, what are the pain points with that specifically? And then, you know, if I had a way of helping you either raise more money or close deals faster, like, would you pay for that? And like, how much do you value that? And so like, that's ultimately like the three things that I'm doing in every conversation with someone in my customer segment. And then that is what dictates what features we build at Homebase. So I think we've done a really good job up until this point where we've now been able to migrate customers from some big players, where that to me was incredibly validating. We have like probably a tenth of their features, yet people are willing to move over a lot of assets, even with all the pain that comes with that.
And why do you think that is? I think you bring up an interesting point that you mentioned earlier that people were taking a chance on you. And it seems like now, too, sometimes they would do that. But why?
Yeah, I think this is the beauty of founder-led sales. I think if you can have like people love to work with people that they like. And so it's a question of I'm currently have my systems with like a big company. I probably never talk with the founder. I'm probably talking with maybe a salesperson and then maybe a customer support person that's probably been like either outsourced or they have someone I can chat with, but like they don't have a great response time or like, and so having the ability of talking with someone who's actually building the product, giving direct feedback as to like, if you guys did something like this, it would actually really help me. And then seeing it come to life, like there's just very few times you as a business owner get to impact someone building something to make your life easier. So I'd say like that has really helped us get people to move over. And then, when you actually build what you promise people, it feels really good because then they're very excited. And then you're kind of like, see, I told you I was going to do this. You basically took a bet on me and now I've delivered. And like, now we're helping you with some of these, workflows.
Mm, I like that a lot. So, speaking of your customers who are GPs and sponsors, maybe let's talk a little bit more of that. I mean, you've raised capital yourself as well, and now you're helping GPs to do this at scale, right? So, when you mentioned that you attracted a list of over 3,000 investors, what do you think you've done differently to build that kind of trust at scale or to get that kind of metric?
Yeah. So a lot of the times people don't invest, like, this is what I try to tell a lot of the sponsors that we work with. People don't invest in deals, they invest in people. And so, like, as you're raising for a deal, like, you need to have a really strong narrative and story because ultimately, like, yes, you have a deal that's like 15-20% IRR. That means nothing to me if you can actually operate the deal well, right? Like, you're basically selling me like a dream. So I need to believe that you're going to actually fulfill that dream. And so, like, that is what I try to tell, like, our current customers and even new sponsors that I chat with and, like, the podcast that I have. But the reason I even bring that up is because, like, the way that translated for us at Homebase was we were selling this dream of letting the average person invest in real estate for as little as $100. And so we had zero track record. We literally never done deals. Like, people didn't care. What they cared about was, like, this story that we were selling of, like, the average person can invest. We're going to give you that opportunity. And like, here are properties that we're going to be purchasing with that capital. And so that story was just really strong. Ended up like we went viral a handful of times on social media. And by viral, I mean like 350,000 impressions that then led to like, we got so many signups in one day that actually crashed our website. And that was like a big learning we had. It felt awful because we had all these people coming and just could not sign up. And I'm like, oh my gosh, we just missed out like on thousands of potential customers. Because it was down on the very first day we went like viral, and I was a good learning lesson. But like going back to like we were selling the story narrative, and so luckily we delivered on it. Like we held the property for about a year. We sold it both of them already, and everyone made anywhere from like 7 to 12% IRR. We got really lucky with location, price went up a good amount. And so like that was really the experience with that, and so. A big part of it was like the painted door test that I mentioned earlier, how we drove people down this funnel and then ultimately got a lot of those people to convert and actually invest in the deals.
I love it. And I think based on what you're saying, it seems like there's a lot of sponsors out there that kind of misunderstand the investor experience, right? They'll throw out these sexy numbers on a pitch deck and expect people to invest. And they're like, oh, come to Texas, come do this, come do that, cash on cash. But what's the reality is that people care a lot about who's behind it. Like you say, about building that trust and showing them that you are the real deal, that you can actually do what you say you can do. So how do you think you can build that trust up front?
Yeah, I'd say trust is built over time. It's one of those things that it's like if I went to market or like not me, but like let's say someone else, like let's say you're a new sponsor and you went to market tomorrow and you have this amazing deal. It's probably going to be incredibly hard to find investors that are not people you already know. Like it's like, and they're typically not investing in the deal. They're investing in you because they trust that you're going to operate it well. And so I've interviewed like 59 plus operators. You ask them what their first deal was. It was always either like them, their own money, them with their wife or partner, or it was like a handful of friends that all came together to buy something. That was their first deal. They got a lot of experience. And the second one probably had like extended networks. So all that is to say, like, it's really like your close circle of people that first have trust in you. And then you basically grow that trust over time. And the way you can do that is by building a track record, posting a lot of educational based things on social media. So you're basically, even though people aren't directly interacting with you, like they see your name, they see your voice, they slowly get to know who you are. And then at a certain point, they'll feel comfortable enough to either reach out to you directly, have a conversation with you. And then at a certain point after that, they'll feel comfortable enough to invest. And so like, that is the part that I try to tell like sponsors, like you can't just come tomorrow with a deal. Like everyone's looking for investors. Like, why are you special? And the only way you're special is by building trust over time.
Mm-hmm. So speaking of that, of your network and everything, so that's interesting. I agree with that. I think a lot of people get it wrong in that they just send out a whole bunch of messages and emails and stuff. I get deals in my inbox all the time. But for you, I mean, you raised for your deal without a name, without a network, right? You just went viral, and then you got the investors. So, I mean, if you had to do it again, how would you do it?
Yeah. I mean, so funny enough, the very first deal was actually like, once again, friends and family. So the second deal was the one that we had a lot of people we've never met. Or like, that's not true. We actually chatted with every single person who made an account and scheduled time with us. We would just do like a 10-minute block. So there was a period of time where one of my co-founders had literally hundreds of calls a week of 10-minute blocks of truly like back to back to back to back to back of just people, because you have to establish a relationship, right? These were Reg D 506B deals. So we could actually never like talk about them publicly. So we never marketed them. The way we went viral was talking about it post the fact. It was like, hey, like we did this thing. We had people invest like as little as $100 and that we just did it. And then everyone was like, wait, what? Like, how do I be a part of the next one? And then that's what went viral. And then everyone wanted to be in the next one. And then we, of course, had conversations with everyone. So that was kind of that journey. And so what I would tell people, like first starting off, first, like think about what makes you unique as an individual. Start being open and sharing your story on social media. And then like if I had to do this again, like I would just do that earlier. I think we waited too long to do that. Like we could have even had like a bigger launch. So that when you eventually are raising for a deal, you already have like an established network and community that you can lean on.
Mm. Social media is definitely a powerful tool, and it's also not for everyone. I think from the people that I've spoken to, about half of them do it. 30% say they'll never do it, and 20% say that they should do it, but then they never start. So where do you think, with social media, where do you think that will go as far as the relevance in capital raising for deals and just the landscape moving forward?
Yeah. So I'd say social media almost levels the playing field a bit because the folks that never do it typically have already pretty strong networks. Either they worked somewhere and they already have people that they know that have money. It's very rare when you find people that like truly come from nothing and then they're syndicating deals with just their friends and family because like those people don't have capital to lean on. So they typically like, try to partner with someone. They'll do the operation side. So they'll do like the blood, sweat, and tears side of it. But social media is a great place where anyone could potentially go viral. Anyone could build a following. Anyone can share their insights and get distribution. Ultimately, distribution is like the name of the game, especially in a world where more and more AI is taking over like all conversations. So how do you build authenticity? It's by like building a personal brand. Um, I like very, very strongly believe that. And everyone looks people up online. So like before I'd invest with you, Leo, like I'd probably look you up on like, I want to see if there's any criminal record. I want to see like what your brand presence, like, you know what I mean? Like I want to get to know you before I talk with you so that I feel comfortable even before we have a conversation. And you do that by like, if there's nothing about you, I already go into this call a little bit skeptical because I'm like, why isn't there anything about you? This is a little bit weird. Are you going to take all my money? So yeah.
I completely agree. I'm frequently surprised at the investors that come in and book calls with me, and I'll see there's zero mutual connections, and they have like 14 connections, and I'm like, how did this guy find me? But the fact that is, I probably had my post get pushed to him through the algorithm. He looked at my profile and he's like, well, this guy's somewhat trustworthy. I think I like what he has to say, so let me reach out. And I think people they overestimate their ability to book a call, right? I think the barrier to action is quite high nowadays. You have to build up a lot of that trust up front, and you build it through exactly what you say. So sharing your story, through giving value up front, delivering helpful things, and just being a point of value in their life. And I think that's where the attention economy is shifting. It's less so push, it's more so pull.
I completely agree. I I'm with you. And it also takes a while to build. Like you'll probably see nothing happen for 3 to 6 months and you're like, I'm just wasting my time. But like even for me right now, like I probably started pushing to build a LinkedIn presence like last October. And I like started posting maybe in January is when I started posting daily. And I'm finally now starting to see some dividends where we're starting to get inbounds and people being like, hey, like I've seen you. Someone just shouted us out like earlier this week saying like, hey, I saw one of the sponsors you had on your podcast. We're now partnering together on a deal, all because like I reached out because I saw him on your podcast, and I'm like, that is amazing. But it took a long time for like some of this to start coming together. So for anyone listening who's thinking about building something or like starting to build their own presence, like you should just know that it's going to take like 3 to 6 months to see anything, but don't give up and don't lose faith because like brands take a while to build.
Absolutely. And with the amount of content that is out there, it's literally going up exponentially day by day. You have so many people using AI to put out low effort posts, and then the content just goes exponentially high. So your your barrier of action becomes higher and higher. It's like, why should I watch this video? Whereas 5 years ago, people will watch any video, right? That shows up on their feed. Now it's like, yeah, I'm not gonna do it.
So true. And oh my gosh, the low quality AI posts are starting to like hit a nerve now. I'm just like I think it'd be better if you like didn't automatically comment like something incredibly vague on everyone's post because this is actually so cringe. But hey, all power like there's a reason people are doing it. I think they're getting to a point where it's getting oversaturated, so I think people are gonna adjust accordingly because for example, like even including M dashes in content, I make sure none of my content has M dashes anymore because it's a telltale sign that it was AI generated. And people now look quite negatively on AI generated content if it's very obvious.
Hmm. And M dash is what now?
That's just like the long line. Like
Hmm.
like when you have two complete thoughts together and use an M dash to basically connect them. AI does that a lot. So
Definitely.
pro
And
tip for you,
emojis.
I don't know how you're posting.
And emoji. Yes.
And
Yes.
emojis for
Definitely.
sure.
Oh yeah. I mean, I use AI for my posts. I think the way that I use it is to optimize my workflow. So it's kind of like the 80/20 approach. Like I will have the base idea, and then I will have LinkedIn, or I will have ChatGPT format it to a LinkedIn post, and then I will put my refining touches on it. So then it's exactly what you say. I take out the little emojis, the dashes, whatnot. They've evolved through the few months. Uh, what I've noticed was the two asterisks. right? Because that's how they make it bold. But then people just paste that onto LinkedIn. You're like, I know where you got that from.
Yep, yep. No, no, no. To be fair, I think most people use AI to build their content. It's a matter of just like the post editing of AI putting it together, right? And so like that's where you really differentiate yourself as someone that's like putting time and effort into their post versus like I'm just going to copy paste verbatim what ChatGPT just gave me.
Oh yeah. I think on the topic of leverage, I think that with AI, it really democratizes productivity because a small team like you, like a team of 3 people, you can do what maybe 6 people could do back before AI, in 2021, because you do far more per unit of time now. And it is my belief that this will bring more enterprise value to America. People will hire out more. People will outsource things, right? As the pay bumps go up. So I think it's an interesting dynamic, but a side thought.
No, completely agree. It's one of the reasons like we're able to compete with some of these established players in the space. If it wasn't for AI, we would not be where we're at today in terms of product development. We'd be, you know, 6 months behind where we are today.
I think it's figuring out how to use the tools to get leverage and figuring out what is your unique advantage. And then once you figure those 2 things out, you spread it. You keep on pushing that message out there so that people can hear it. And like you said, eventually people will start listening because they see your content enough times. They're like, okay, he's that guy that does this. I get it. And then they'll reach out. And I think the biggest mistake that people make is that they're far too impatient. They measure in quarters where you should be measuring in years at minimum.
Completely agree. No, you do have to change your mental model, and these things take time, but it compounds. And so a lot of the growth comes in the back end.
Absolutely. So as we round out the conversation, a couple rapid fire questions, just kind of short back and forth answers. What was your most painful lesson you've learned as a founder?
I mean, there's so many of them. um, I'd say never take anything like never take growth for granted is what I'd say. It is incredibly hard to get and incredibly easy to lose. There's been weeks where like we crushed the number of customers that we signed from like a personal record perspective. So it's not even like big for other organizations. And then I'm just like, now that we have this, like we're of course gonna get customers next week or like the next week. And then like that doesn't happen. And it's because you take your foot off the gas. And so you kind of you have to be in like the system where you really can never take your foot off the gas. The second you start, settling and taking things for granted, that's when you lose your edge. And I'd say like that's truly all startups have or like early stage companies have. It's like the speed of execution, right? Like that is how you're going to beat your competitors. The speed. And so you can build things that other people are way too slow to actually react to. So
Only the paranoid survive. That's what they say.
I like that quote.
Yeah. So, okay, most overrated capital raising tactic.
This might be a hot take, but having to join like a 20K plus mastermind. I don't think you need to do that to get started. I think there's a lot of other ways you can begin your journey with friends, family, networks. However, there is a lot of value in joining them. I think it's kind of like going for an MBA. I think the value of MBAs have gone down dramatically. However, you get insane networks through them. And so like those people are going to do really good things and you're going to, hopefully be along for the ride and like help each other. But don't think just because you join one of these communities, like they're going to teach you how to do things. You're joining for the network and just realize that.
Best network that you've been a part of.
I mean, it'd have to be Penn/the Warden Network. It's incredible.
What is one non-obvious book or idea that shaped how you operate?
The 3-Body Problem in that entire series. I don't know if you've read it, but it has to do with what happens if humanity would ever like interact with extraterrestrial life. And it's actually a Chinese book that was translated to English, and just so many, like it tries to be very real with physics, with like how things would work. And the ideas just become like so abstract, but just like changed my entire perspective on life. And so I never try to take life too seriously. You realize that you're like, we're just here all temporarily. So why let certain things stress you out when they really don't need to?
I love it. Final question. What's one founder, GP, or operator that you admire that more people should know?
That is a really good question. I don't want to call out any GPs. I want to show favoritism. I work with so many of them. So there's some incredible GPs we've had on the podcast. So I love. Actually, I will. I'll shout out Gurjot Sethi. He was one of our very first customers. He's now an advisor to Homebase. He is like one of the most well-spoken fund managers I've probably ever met, and like doing some incredible things. I really, really enjoy every conversation I get to have with this person. And I feel like I've learned a lot from him. So
I love it. Well, thank you. Thank you for all your insights. And so, Domingo, where can people go to connect, learn more, and get involved with you?
yeah, so you can just find me on LinkedIn. It's Domingo-Valadez, and you can just, reach out to me directly. Or you can go to our website, like homebasecre.com. I'm like very active on LinkedIn, so if you reach out, I will reply. And we have a lot of content to help sponsors raise better. A lot of it we give out for free, and it's a lot of the stuff that masterminds and gurus will charge you like 10K plus to get access to. Like, given we've done it, we put together all these templates and we just give it to folks for free because we don't think that should be behind like a paywall. Feel free to reach out. We can be helpful.
I love it. Thank you for coming on, Domingo.
Thanks so much for having me on, Leo.